What's up, traders? I am Vincent Mokoteli from Forex Signal Factory. This is not a financial advice. It's powerful education for those ready to level up. With the right mindset and real strategy, success is within your reach. Welcome to Forex Signal Factory, where signals meet success. So traders, what we do have today is, of course, just like we already know that before we start with the charts every day when we have big economic events, we do have a fundamental outlook firstly. So to explain what to expect, yesterday we did with the CPI, but there was no enough movement or anything that was particularly triggering for us to jump into the market, as I think the cooling, even though it was worse than expected, but it was still keyed in or pricing, it was expected and in alignment with the rate cut expectations from the Fed. So with that being said, traders, nothing much, and I also think big traders will put more money into the market coming into today, of course, with the CPI. So let me tell you, for this fundamental outlooks to really be in line with my technical outlook, of course, this would be, I would like to see this previously from 0.3, and the forecast is 0.3, of course, is to remain the same, the core CPI. I would like to see this as coming out at 0.2 or less. This would be a fantastic setup. This would also allow us to sell the dollar to the downside, of course, and I would like to see, of course, the CPI of month over month coming in from this beating the below the expectations, of course, at 0.3%, and from 0.2 I would like to see the outcome being 0.1. This would be a fantastic print of data, and it will align with our current technical analysis. So if the dollar becomes bearish, it becomes in line with our, of course, supply zone and the demand zone that we technically put when we are doing our weekly forex forecast in line with our daily analysis. So without wasting much time, this is what I do expect. And of course, there is the ECB interest rate decision, but it is expected to stay the same, and the Euro deposit facility rate for September, it is expected to stay the same. I don't think I would see anything different from these two. That's why I don't want to touch much on it. But of course, with it remaining the same, it will boost the euro to the upside. And with the CPI coming in 15 minutes later, if we do miss the expectations, as I do expect, or anything below this stats that we want to see, this is when the euro and the dollar will sharply move to the upside. But if they do surpass like the expectations from the CPI, as you can see, it is to remain the same. And with the CPI month over month, of course, it is to increase with 0.1% from 0.2% to 0.3%. But if we do beat the market expectations, of course, the dollar would be not strongly bullish, but slightly bullish, which might in turn fade maybe tomorrow or towards the close of the New York session. So with that being said, this is only the fundamental that we'll be covering. Let's go straight over to the currency charts. So traders, with the euro and the dollar, what happened yesterday after this, we did mention that if we do not find any great setups that close above here and we continue to the downside, we would like to see a test and a continuation to the upside. But instead, what did we find? Of course, after this bounce, we did try to get in here with the PPI, but the move was not strong enough to take us to the upside. It indeed came down and invalidated us. What do I expect from today? Of course, I do want to see us come back down again to retest this demand zone at 1.1681. You can see it has already tested once and it has already tested twice. I would like to see it having one more touch of our demand zone. This is the first and the second. I would like to see it come down to retest this demand zone, or rather go deeper to the second demand zone, which is 1.1664. The level is 1.1664. I would like to see it touching either of these and giving us buying opportunities to the upside so that we can continue. So on the CPI and the ECB interest rate decision, this is the key areas that the market will be focusing on, or that we will be focusing on with our real account traders community. So with that being said, this is the euro dollar for us. What do I expect? I expect to see this. I'm still biased to the upside. The only time that a trader like me using this type of strategy would be considering to go short on this market, it is only when we will be in a situation where the dollar comes in too strong. After this, the invalidation of the weekly break of structure, a retest of this broken weekly break of structure that will act now as our supply zone or resistance level, and then a continuation to the downside to make that 1:3. But rather than that, anything that includes being within these demand zones is still expected to make the structure to the upside. So that is it with the euro dollar. Let's go straight to the pound and the dollar. And traders, with this pound and the dollar, I do see three waves here. This is 1, this is 2, this is 3, this is 4, and this is 5. I do see this as an A, of course, a B, and a deeper wave to retest and make a C, and then a continuation to the upside. This is still what I'm expecting. So yesterday with the CPI, we did come in here with this, and after this, I did not choose this to be an invalidation. I did this as a break even. We all know why it had to be a break even, because the pound, it is stronger than both the euro and the dollar, but we will see that discussing the strength of the pound and the euro when we are discussing the euro and the pound later on this video. So traders, this is exactly what I want to see happening, a retest. And I did want to mention that obviously if this is the start of wave 5 and we have an ABC correction, we might have an ABC correction that invalidates the wave 5, the beginning of wave 5, which is the higher low, of course. And then after this, we would see ourselves going down to retest 1.35, 1.3459. 1.3459 would be a great place to look for buying opportunities, but it would not surprise me if it doesn't reach the 1.3459 also. It only retests 1.3505 and then a continuation to the upside. So 1.3505 is the level that we discussed with the real account traders community. It is a level that comes up right now. It is not the level that we talked about when we were talking about the weekly forex forecast with the real account traders community. And remember, traders, to join the real account traders community, it is very simple. All you have to do is have $100 for you to deposit in your own account, and then register with us, verify your account, deposit $100 with your own account, and then start receiving this detailed analysis on every single currency pair that there is in the forex markets. And not only that, with gold and silver and Bitcoin trading. After that, after you've been added to the group, you'll get also a proven trading system, which is the one that I'm using, including together with a trading course that can take either beginners, that can also take either professional traders to understand more, or those who are struggling with consistency to keep their consistency game up. So without wasting further time, this is the pound and the dollar for us. What do I expect? I expect to see this level try to hold, of course, or this first demand zone, but I do not think it will get to the second demand zone based on the strength of the pound. But if it does get to the second or demand zone, which is this one, it will still be a great place to look for buying opportunities to the upside. The only time that we will be looking for selling opportunities, of course, in this market, it is only when we are now at a loss of strength with the pound against the dollar, and this will be the scenario after the break of structure, the break of weekly break of structure. It will come out and then retest, and then a continuation to the downside to make that 1:3 risk to reward ratio. This is the only setup that will be focused on selling setups, but anything other than that, we are still structured to the upside very much, and I would like to see buying momentum coming into the market to make that 1:3 risk to reward ratio trade to the upside. So that's it, traders, with the pound and the dollar. From me, we go straight to the euro and the Canadian dollar. And my beautiful traders, with the euro and the Canadian dollar, the momentum was never clear to begin with. This looks like just a test. It looks like it can continue to the upside with the Canadian dollar losing strength to the euro. So with that being said, this is still not confirmed. I do want to see this retest the first demand zone at 1.6179. This would be a great place to look for buying opportunities to go and make that 1:3 risk to reward ratio. This rather we did not trade because of one thing. It is not directly correlated with the CPI news that came in from the dollar, so this did not make any sense for us to trade it yesterday. This could have been the move if this happened, a pullback and then a retest of this broken resistance now turning support would have allowed us to continue to go to the upside and make that 1:3 risk to reward ratio. And with that being said, guys, you know that we are not discussing the pound and the Canadian dollar, as it has already taken profit right on Monday or on Tuesday. It was on Tuesday, of course. So what we would like to see us analyzing is only the euro and the Canadian dollar and the euro and the pound, as also the US dollar and the Canadian dollar has taken profit also on Tuesday. So without wasting further time, I do not believe that this can come and retest the second demand zone, but if it does, this would also be a great place to look for buying opportunities to the upside. And with that being said, this is my expectations on the euro and the Canadian dollar today. A retest of the first demand zone or the second demand zone to continue to the upside, or if it does not rather retest any of this, it can just break and retest and then look for buying opportunities right here and continuation to the upside. This is still a possible true wave of a double bottom, an inverse double bottom. This is still a possible inverse of double bottom, so we have to check out the structure and then a continuation to the upside. So let's go over to the last currency pair that we'll be analyzing today, of course, which is the euro and the pound. And traders, with the euro and the pound, we just had a trade right now. This is the last trade, so if this does not go in our favor, what this is, I will explain to you why that means and why this is the last trade. Now, firstly, we are nearly close to our weekly break of structure, of course, and with that being said, I expect to see a break of this, and then after the break, maybe during the interest rate decision, a boost of this momentum to the upside to reach our intended target at 0.8712. Now this would be a fantastic place if we do reach this place. If we do reach this place right here at 0.8712, which is of course, another area of target profit. Now, let me explain to you why I say this is the last trade. Firstly, we did have a trade from this level. Of course, if everybody remembers, it was on Monday, and then after the invalidation, nobody really did take a trade yesterday. This didn't seem like it was already going to the upside, so we did expect to see a weekly break of structure, but we did not reach that level as of yet. It looked like it was testing the last liquidity zone, and then just as I'm expecting to see to the upside, this is exactly what I want to see to the upside. Now, with that being said, this is what I do expect. If we do come down, of course, and get invalidated, this would confirm our yesterday's cautious stand of not trading until we break or reach our weekly break of structure. And this also is the level to watch, 0.860. So right after we reach 0.860, we would break even right here. And then after the break even, if we do come down and break even to retest this also means that we would be structured to the downside to the end of the week and going into next week, of course. But for now, nothing is still as clear. For now, we are still structured to the upside. The reason why I'm still structured to the upside is because of the structure, nothing else. I'm not biased to buying the euro against the pound, even though the pound is strong, but the structure similarly shows that this can still go to the upside. Now, traders, this is the euro and the pound, and the last currency pair that we'll be analyzing today. Of course, we would not be analyzing the Canadian dollar, we would not be the US dollar and Canadian dollar, we would not be analyzing again the pound and the Canadian dollar. This means that all those that we are not discussing into this video is particularly have given us some pips and some profit. The ones that we are still monitoring at this point, we are still chasing to see the pips to the upside. And this is it. After this, there's no more trying to jump in or trying to find more trades. We will wait for this retest, continuation to the downside to make that 1:2 the risk to reward ratio. So that is it from us traders, Vinbo Signal Factory, and today is the CPI. I'm sure I might be able to share some live trades with the CPI, of course, later on. And with that being said, traders, thanks and happy trading.